Hello, and welcome back to our quarterly series where we will discuss trends in how consumers are shopping for auto, homeowners, and renters insurance. At JD Power, we survey 1,000 U.S. consumers every day to keep our finger on the pulse of consumer behaviors around shopping for insurance and potentially switching to a new insurer. We aggregate this data in our Loyalty Indicator and Shopping Trends, or LIST product. LIST is available to subscribers on a real-time basis, and we share high-level industry trends with the public quarterly. In this video series, we take a deeper dive into those high-level trends. After new record-high shop rates for auto insurance were observed last year, we started off 2025 with a bang, as 14.1% of U.S. consumers shopped for auto insurance on a rolling 30-day basis, a new record high in our LIST data series. This is almost a full percentage point higher than the previous record of 13.3%, set twice last year. As with last quarter, industry data continues to show decreases in rate taking across personal lines auto insurance. More consumers are shopping for auto insurance now that carriers have returned to growth mode with increases in ad spend, reinvigorating sales channels, and a nascent return to a more normal market. We mentioned last quarter that we expected an increase in shopping in early 2025 as January numbers were indicating a massive wave of shopping. It turns out that wave was only just beginning in January and peaked in February with a 14.4% shop rate in February before falling to 14.1% in March. Early April numbers suggest a further decline in shopping. This is welcome news to insurers who are looking to grow, as an increase in shoppers means more chances to quote new business, and carriers especially want to win the Robinsons who bundle auto and home insurance with the same insurer and are traditionally more lucrative households for insurers than other customer segments. Robinsons shopped at the highest rate we have seen in our list data last quarter at 12.3%, while switching was only at 2.4%, which was slightly below the all-time high of 2.6%. Now turning to some trends at the carrier level. Progressive provided quotes to the largest group of shoppers this quarter at 31.1%, an increase from 29% last quarter, followed by Allstate at 29.5% and Geico at 26.8%. Progressive also acquired the largest share of customers who switched auto insurers in Q1, winning 27.7% of those who switched insurers. State Farm was more than 10 points behind, capturing 16.8% of switchers, the second largest share in the industry. Geico, Allstate, and USAA round out the top 5 destinations for switchers at 16.2%, 12.0%, and 3.0% respectively. Despite industry-leading customer acquisition rates, Progressive also has the largest share of customer defections this quarter, 15.7%, followed by Geico at 14.2% of all insureds who switched away from an insurer switching from Geico this quarter. State Farm, Allstate, and Farmers round out the top 5 at 13.6%, 13.1%, and 3.7% respectively. On the topic of auto insurance shopping, we published our 2025 insurance shopping study on April 22nd, which takes a deep dive into the motivations behind shopping, who is shopping, what they are shopping for, carrier acquisition funnel performance, satisfaction with the purchase experience, and many other salient topics surrounding auto insurance shopping. A few points to consider from that study. First, consumers are increasingly interested in embedded insurance, with 37% of shoppers saying they're interested in buying auto insurance through an automotive dealer or OEM. As our quarterly list report shows, twice as many consumers believe the service through an automotive dealer or OEM will be better compared to those who believe it will be worse than a traditional auto insurer. Number 2, after seeing insurers pull back on offering UBI last year, consumers who recently switched auto insurers are more likely this year to say UBI is important in their shopping process, as 41% say so this year compared to only 32% last year. And last, 61% of shoppers enter their shopping journey with a favorite insurer in mind, most often State Farm, and the leading reason insurers are mentioned as a favorite is due to perceptions of positive service experiences with that insurer, which is even more impactful than price perceptions. Unlike the personal lines auto market, the personal lines homeowners market looks to be far from exiting the hard market cycle. Therefore, we are not seeing the same upward trend in shopping for homeowners policies like we do for auto policies. On a national basis, we see a slight increase in the HO3 shopping rate to 6.6% this quarter, up from 6.5% in Q4. Shopping for renters insurance continues to decrease as shopping for HO4 policies came in at 6.2% in Q1 compared to 6.4% in Q4 of last year. We have added new questions to our survey and are marrying third-party auto insurance premium data to each survey respondent's data record so that we can go beyond the PIF count analyses and look into analyses at a premium dollar level. Although rate taking has slowed, premiums are not yet decreasing. For instance, this quarter, the average annual premium for all vehicles and drivers in a household moved to $4,429, up from $4,263 last quarter, while the average paid for shoppers was up a little less at $4,602 compared to $4,518 last quarter. Many insurers are now using this data to better understand their competitive positioning across geographies and demographic cohorts to fine-tune their acquisition and retention strategies. If you're interested in learning more about how consumers are shopping for auto, homeowners, and renters insurance, please download our complimentary list report today and take this opportunity to reach out to us to learn more about list and the subscription options that we have available.